Good afternoon, everyone. We had the release of the report. The initial reaction was that the stock was going to be halted. It traded up here as high as the highs there were 527.97 on the initial knee-jerk reaction. And then the reports came out and we've hit the 485 lows. The sales and the fundamentals, we'll be going over it with our team. We'll be looking at how to buy the dips. This is that knee-jerk earnings reaction. One thing I can tell people in after hours, when they spike those things, it's good to get short right there. And if you are long, you sell right away when they do these after hours earnings. They spike them big. They spike them up real big to sell them. And then they pop them down to the bottoms and run them up as well. The whole thing about it is we're going to be taking a look at the in-depth earnings and what tomorrow will bring us on Apple. Here is the swing. Let's just call it 528 to 485. So they popped it at close. They popped at $14 on that initial headline. And you have to know that during earnings season, you sell and ask questions later. Once it started to slip, that's when you look at how to sell short here. And you come all the way down, and we're going to see how these bottoms hold and what kind of conference call and the kind of news that's going to come out. It will set up great opportunity again, as it did a couple weeks ago for us, is that we look to buy the dips. Once they make their bottom, they will have very profound trading ranges. And not only that, the great earnings Google had, they're gapping it down right now a little teeny bit based on this, but this was anticipated. And when stocks are deeply oversold in an earnings report, even with the bellwether like Apple, is where are those earnings priced in down here at this lower end of the market? That's when we'll look at how to go in tomorrow and buy at the support levels, and we'll take the intraday daily trading ranges on Apple.